second. Just let me know if you can hear me okay, please. That would be fantastic. If you can hear me, just type hi in the questions box. That'd be great. Good. Oh, that seems better. Yeah, good. Fantastic. Excellent. Okay, well, look, let's get on with it then, shall we? So I'm sure some of you have been to some of our webinars before. What I want to do today is just get into a little bit more of the detail today, if that's okay, and talk about, a lot of it you may have seen the strategies, may have seen the sniper circles, the discs that are posted on the chart, but you might be sitting there thinking, well, okay, great, but what's behind it? How do we identify trades? And today the purpose is to really go through a little bit about the daily chart trading that we do here, why we do it, what are the filters that we look for, and why do we look for them as well. I'm a great believer of making sure we go through the why in which we do things, because I can just tell you what we do and then you might want to follow it, and that's fine. But if you understand why, then that really does lead to a much greater sort of buy into the process, really. So, if you understand why, it's like, yeah, do you know what? That makes a great deal of sense to me. Do you know what? I can see why you do that. Do you know what? I'd quite like to do that too, because it makes sense. And that's really what I want to try and go through with you guys today. So, a couple of things really. We'll go through some charts in a second, but I want to try and get a little bit of theory out the way, if that's okay. When we look at trades, typically, in fact, let me bring up some charts now. We can go really straight into it. Whenever we look at charts, and there's a chart here for the euro against the US dollar, what we're basically looking for are turning points in the market. That is the first thing that we're going to look for whenever we look at a chart. Why do we look at that? Well, if anyone's done trading before, you'll probably know that it's quite difficult to guess the high or the low of a market, isn't it? Especially with any real degree of consistency. Yes, we might get it right from time to time, but to trade it consistently is a really challenging thing. So what we want to be able to do is identify things a little bit better. So at Trendsignal, what we're all about here is trying to identify a repeatable entry point. Now, how do we identify that? Forget the discs that are on the chart for now. We don't want to be looking at those at this point. What I'm going to be looking at is this line, this red and green line that kind of cuts through these candlesticks. Now, this is what we call the vector average line, and this is all about looking for changes in direction. Let me zoom in, just in case you're on a smaller device, that might be a bit better. This is all about the way in which this market's moving. If this market has an upward bias, i.e. prices are rising, like here, the line will be green. And when the prices have a downward bias, i.e. prices are falling, the line will be red. A color change, like we see here and here, that identifies for us a turning point in the market. And when you see that color change in that line, that's giving us a potential entry point, because that's telling us that this market is ultimately changing direction. It is the filters that we then apply that determine whether this is a trading opportunity that we should like to take. So is this a turning point that, are we trying to catch a falling knife here, or have we actually got something technically that's on our side that can help us to bring trade confidence, to bring an edge really to our trading? So a couple of things I want to go through first of all, before we get into those things. A couple of things, why do we trade the daily chart? The main reason for why we trade the daily chart, it's actually my favorite time frame, is because it suits my day-to-day lifestyle, and it actually suits most people's day-to-day lifestyle. There's a lot of people who try and force trading into their day-to-day routine. Typically, that doesn't work. What you'll often find is that you'll miss trades, you'll get more frustrated than anything else. You're expecting the markets to dance just because you happen to be looking at them and you happen to have a spare 10, 20 minutes. It just simply does not work like that. I find too many people sort of chasing their tail rather than actually incorporating trading into their day-to-day lifestyle and around their day-to-day lifestyle. That means that it tends to fit much better, and dovetails better with your life, which typically leads to much better outcomes. So for me, I've always found, okay, you might have time to day trade, but a good starting point for traders to build confidence is to eliminate as much frustration as possible, because then you can just focus on the act of trading itself, the entry points, the managing of the trade. And that's why focusing on a daily chart, 4-hour chart, those tend to deliver the best results, because they have the least amount of frustration, and friction between our day-to-days. So that's fine. That's daily chart. And I'm not saying that intraday trading isn't right for anybody. What I'm saying is it's got to be right for you, whether you have the time to be able to do it. You need a couple of hours in a day really to be able to apply to it. It doesn't mean it has to be every day, but you have to be able to allocate a couple of hours. You need to be at your screen. You need to be able to concentrate on it really. Whereas end of day trading, daily chart trading is very much around everything else you might be doing. For me, 3 kids, running a business, whatever else it may be, it's something that I can do alongside that. Anyway, in terms of markets, the great thing about trading a daily chart and a 4-hour chart is that we can be less sensitive to costs. The shorter the time frame, you want to be trading the most volatile markets, the fastest moving markets, I should say, not volatile. Volatile, I think, of a word always has like negative connotations, but you want to be trading the fastest moving markets on any given day, and you want to be trading the markets that have nice low dealing costs or spreads relative to that speed in which it moves. When you're trading daily charts, you're trading off bigger moves. Instead of 10, 20 points, you might be looking 50, 100, 200 points. You're not so sensitive to cost, so actually that means you can look at more markets. You don't have to trade the fastest markets. You can trade some slower ones as well, and you can trade some markets with wider spreads, because you can absorb more of that into the moves that you're going for. That means you can look at a broad range of foreign exchange, some indices, some commodities. You can trade stocks on a daily chart, and you can trade cryptos. So really it is about your own personal preference. Now, quick question, everybody. Is there a particular asset class or type of market that you're particularly interested in? For FX, indices, stocks, commodities, gold, crypto? Let me know in the questions box. It's always nice to get a bit of participation in these things. For me, I don't really care too much. What I would say is about well, I say I don't care. It's not to say I don't care what you say. I don't really care too much what I trade. What it could be crypto. It just moves faster in a slightly different way than stocks, which move in a different way to foreign exchange. But it's just about understanding that. The fact is, all of them create opportunity for us. It's just about how we capture that opportunity. So that then brings us into what do we then do with it? So we know what types of markets. We can be pretty flexible there. The daily chart is something that's good. We know about turning points. We know about the repeatable entry point. Whenever this line changes color, it gives us something that we can hang our hat on to say, right, this market's doing something now. This is a potential opportunity. And this is the other thing with it. You can spend hours and hours and hours looking at charts and thinking, well, I don't really know where an entry point is. Without a repeatable entry point, if you've got something that's very discretionary or subjective in order to identify a possible trade, you can spend hours and hours and hours analyzing stuff, candlestick patterns, chart patterns, and so on. What you'll notice from what I'm going to talk about today is that those things are secondary. If those things are primary in your analysis, then your analysis takes forever, because what you're going to have to do is work out candlestick patterns, chart patterns, support and resistance, blah, 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 in order to identify a potential trade. Here, I have a potential trade, which is identified by color change. So all I then need to do is then analyze whether this is a potential trade that I should like to take. So I'm doing a lot of, this line does a lot of the work for me. Do you understand? Hopefully you see where I'm going with this. So what I want to do is just take a step away from that, and let's just have a look then at some of the things that we might look at. Now, look, one of the things you're going to do is when you're looking at trades, you want to look at context. So whenever we see a turning point in the market, so a market that's going from down to up or up to down, what we want to be able to do is establish whether this has got a higher likelihood of success. Is this got a decent chance of being a winner, or is it a bit of a punt? That's really what I'm looking at here. The funny thing about trading is that a lot of people go into it thinking, well, I'm just going to take a trade on a market that is heavily, it's just been hammered, like Luna in the cryptocurrencies or indices lately, perhaps. I'm going to look for a market that's just been absolutely battered. It's bound to go up at some point and they're going to buy it. The funny thing about that is that's something that we wouldn't normally do in pretty much anything else in life. If you think about what a lot of us are used to speculating on, is probably sport, right? Most of us have probably put a bet on something, or at least thought about a bet on something, whether it's horse races or football or cricket or rugby, whatever else it is. The thing that you're going to do, if you're going to get the form guide, if you're going to go to horse racing meet, what are you going to do in order to select a horse? Now, I know what I would do. I know nothing about horses really, but what I'm not going to do is select a horse based on a nice, fun, clever name. That's the last thing I'm going to be doing. What I'm going to do is I'm going to check the form guide. I'm going to actually see whether this horse is capable of winning. Has it won races in the past? Has it won races recently? Is it in form? Yes, it is. Okay, well, at least I'm going to back something that's got a chance of winning. Similarly, when we're looking at football, you're going to look to the form guide. You're going to look to see whether this is probably a couple of seasons out, this image. So don't, I'm not trying to make a point about Liverpool being top of the league or anything like that, 'cause of course they're not. But, the point about it is what we would do is we would assess whether the team is in form right now. Is it on a decent run of winning matches? If it is, then we're probably going to be more likely to back it for a win than it is that we're going to back it for a loss. The irony is, and the curious thing about it is, when it comes to trading, anyone that would look at, say, these results here, like let's say 4 or 5 wins in a row, anything that, that's effectively a market that's gone up stratospherically. With traders are thinking, well, that's gone up way too much. Must come back down again. It's got to lose again soon. Whereas if it came to actually backing your football team, you're thinking, God, these guys are really on form. I'm bound to back them for another win. And this is the weird thing about it. The mentality with trading is different. The mentality when it comes to gambling is ironically probably the right thing. We check the form guide, we back the seasoned horse, we back the informed team, and so on. And I think a lot of that probably comes down to, it's very easy to establish whether a team is in form or it isn't, whether a horse is winning races or it isn't. But it isn't easy on a currency pair. It isn't easy to establish trends on other markets. So the question is, how do we do it? What should we be looking at? Guys, is this all making sense so far? Let me know, folks. Just type yes or no in the questions box. Let's make sure we're all, on the same page, really. I think we could probably all agree, though, that if we were able to establish the form of a market, it would help us, though, wouldn't we? Could we all agree on that? You can type A for agree or D for disagree in there. If we could establish the longer term direction of this market, i.e. the trend, i.e. the form, is this a winning team or a losing team generally, it would give us an edge, wouldn't it? So, really it lends itself to the fact that that's really what we should be focusing on. And again, that's what a lot of people, we don't know how to do it and so on. It can be very, very difficult. So what I've got here is some data, and this is a little bit out of date. It doesn't necessarily matter though. This is just to demonstrate a point. So that what I've got here is some data, from some old strategies actually at Trendsignal. We've sort of updated our strategies a little bit since then, but this kind of demonstrates a point relatively well, that when we establish trend, what it can do is help us to put the odds in our favor. And a lot of that's down to consistency. What I'm going to show you in a way kind of contradicts what I'm saying, but I'm going to say it anyway. That what you've got here, so there's some various strategies that from Trendsignal. So we've updated these a little bit since then, but it doesn't actually matter because it still demonstrates the point. So this is with the trend, and this is with the trend, this is against the trend. So these three strategies, two of them are with the longer term trend. How we establish that, I'm going to go through a little bit later. And the one at the bottom is a particular type of trading opportunity that is against the trend. What I've got in this column here, which is probably the most important column, is the number of pips, the average pip movement for each of those trades. So if you add up all of the moves from those trades and divide it by the number of trades, that gives you the average pip movement per trade. What's quite interesting is that there's actually no real difference between the result, whether a trade is with the trend or against the trend. The difference is more subtle though. When you take a trade that is with the trend, what you'll typically find is that there is a greater degree of consistency in the result. This is the misleading thing about data sometimes. And let me explain what I mean by that. Let's take two trades that are perhaps with the trend. If the market is with the trend, you're more likely to have a winning trade on this basis. An average of 223 pips over that period of 6-7 years. Effectively, it could look like one trade at 200 pips as a win, and one trade at 240 pips. Effectively, they're two nice winning trades. The average is 220. Okay, simple enough. When you're trading against the trend, the difference is rather more spread. So you either have big winners or you have horrible losers. You don't really have that much of it in between. So you get much more of a disparity between the opportunities. So for example, you could still have a 220 pip average by a trade that goes one up 20 pips and one up, oh God, this is going to test my maths, 420 pips. Okay, so against the trend, what have you got there? You've got one trade that went up a little farty amount that you'd have lost money on overall, and this second trade that went up quite a lot. It's that degree of consistency that allows us to trade with greater confidence. The problem when you're trading against the longer term trend is statistically, overall, it looks like it's just as good, but actually it isn't. Because what you'll find is that frustration that, oh God, it's just not even gone anywhere. It's actually just, this horse has just, actually, God, it turned out it only had 3 legs after all, and it's fallen straight away. Those sorts of trades, what you'll find is a greater disparity between winners and losers, and therefore a far less consistent approach to trading. So in order to establish consistency with your trading, you need to ensure that you have that bias. You have an understanding of context of which way this market is more likely to go in a more consistent way. Because correct me if I'm wrong here. What would you prefer? What type of results would you prefer? Results that are more like A or results that are more like B, i.e., are more consistently better performing opportunities, or would you prefer that sort of either massive win or massive loss? I think, we'd all prefer A, wouldn't we? You know, and hopefully, I mean, I don't know whether this chart, this table really demonstrates that point particularly well, but the fact is that when we're trading against the trend, unless we have certain factors in our favor, it is more of a gamble, okay? And I don't know about you, but I'm not really interested in gambling. So, what then that brings us to is, how can we establish a longer term trend? Okay, and this isn't actually all that difficult to do if we know what to look for, and that's where the trend signal system comes in. But you'll see it probably quite obviously when you look at a chart. You can see a market that is posting higher highs, higher lows, and then you'll start to see a market that's starting to move back the other way. When the market's posting, say, a low here, a high, a higher low, a higher high. When it's having this sort of upward pattern, it can be really quite easy to identify that, of course, but effectively, that's what we're trying to spot here. Is this market got an upward bias? If it has, then we should be favoring buy trades. What we should be looking for is opportunities to buy, like here and here, and we should be avoiding or less likely to take trades on the downside. The reason being is that when the market is posting patterns of higher highs, higher lows, or various other longer term trends are in place, the monthly trend is up and so on, you're more likely to have loss making trades on shorts and more likely to have winning trades on longs. Okay, at some point the trend will change direction and you'll start to see the patterns move back the other way. Okay, but you know what? Catching that high is actually quite difficult to do. And yes, we'll get it right from time to time. But for me, the more consistent thing to do is to not try and catch these shorts, every single one of them, but wait until the market starts to say, that's a lower high now. In order for the market to go down, it has to start to put in lower highs. So the more that we can identify the context of this move, i.e. the turning point, that allows us to establish, consistency in our trading as well. So what we're really looking for is whenever we look at a chart, whenever we look at a turning point, we need to establish a variety of factors, longer term trends, intermediate trends, candlestick patterns, chart patterns, in order to find out where in this cycle we are. Are we in an uptrend? Are we in a sideways trend? Are we in a downtrend? And how do we then react to those opportunities given the context there? And you know what? What we look for at Trend Signal helps us to capture all of those types of moves. All right, and we're going to talk about that in just a second. Because what I want to do here, we've talked a little bit about candlesticks. It's pretty straightforward. And actually, if I look at a particular opportunity, you'll see that really quite quickly. If I bring in that euro dollar chart again, you can see downtrends in place. You've got a high, you've got a low, you've got there. That's a lower low. There, that's a lower high. There is a lower low. There is a lower high. there is a lower low, and then here we are. We'll see where this market goes. The ability to establish that and those patterns can make a significant difference to our trading. It's just about having the ability to do it. So whenever we're looking at these turning points that I showed you earlier, one of the things we're going to be doing is establishing those things that are in our favor. Is this market in line with a descending chart pattern? Is it in line with a monthly trend, a weekly trend? These are the factors we look for, because the right combinations of these factors helps us to identify and produce higher probability trading opportunities. Or I say that at least to produce patterns that have historically produced higher probability trades. Okay, so it's all about our ability to look at these turning points, then take a step back and say, okay, looks like this market's changing direction, but why should it go up from here? Why should it go down from there? What do we look for? I think it'd be quite useful to actually have a look at the things that we do look for. So, and these are them, okay? So when we look at our charts, there are certain types of trades, certain types of opportunities, our favorite combinations, that where we see a sniper disc, those discs that are on the chart. This is looking for a particular combination of these rules-based patterns that our algorithm is looking for. And what are these? The monthly trend direction. Okay, a bit like if you're gonna look at, say, Liverpool and Man City, it's not so much about, in football terms, it's not so much about what they've done this month. It's more about what they've done over the last 6 months to 2 years. What's that? Is that a really good quality team? Rather than necessarily that very short term form that it's in. If we can establish the monthly trend direction, then of course, if the market is more likely to fall over the next month, then surely we should be looking for opportunities to short, because those are likely to be bigger. So if the market's going to fall over the next month, the opportunities to the downside are likely to be bigger moves, right? So that means that should be the bias for that. We should also be looking at the weekly trend. This is start to build these layers of understanding up. Of course, the next bit is to know what to do with them and what the combinations are, but it makes good sense to look at these things that way too. The daily channel direction, we're going to look at those in just a second as well. I'm going to show you all of these on a chart soon. But these are the filters that we look for. So why do we look at the daily direction? Because we need to see the current short-term trend of this move. Is this market in a short-term uptrend or downtrend? Why do we actually do it? We do it because we've analyzed all the data and it makes a significant difference. So the reason we look at all of these things is not just because it makes us sound particularly clever. It's because we've analyzed every single turning point. We've looked at the way in which the markets move whenever that line turns from red to green and green to red. And we've looked at what setups, what combination of these rules together identifies the best context and the best trading opportunities. We should also look at chart and candlestick patterns, absolutely, because these, again, the likes of bullish engulfing candlesticks, the likes of higher highs, higher lows, all of these things, again, can lead to an ability to be more selective of the trades that we see. The other thing that we can look at is momentum. Let's have a quick look at this. That's the way in which the market's overbought or oversold. So how do we look at all of these? Okay, let's have a quick look at them on the chart. All right. So what do we do? At any given point on the chart, what we'll see are a variety of different factors, but let's just focus on a turning point for now. So whenever we look at a turning point, what you'll see are, if they are relevant, you will see annotations like these. So what this tells you is what's in play at this point. So this is a turn down in this market. So this line here on euro dollar a couple of weeks ago turned from green to red. Now, what this is telling us is that the chart pattern and candlestick pattern is down. So in other words, we're finding the right pattern for falling prices. That's good. That's got to be a good thing for a sell trade, right? What it's also showing us is that the monthly trend is down, and you can see that on this arrow here. I'm going to show you what that looks like in a second. We can also see that the weekly trend is down. So the other thing we can see, the daily channel direction. See this orange line here? That means down. So blue means up. We didn't want to put red and green on there because it just gets confusing over the other lines. So blue means up, orange means down. And so effectively this line is also down to the daily trend is also down. So when you see a turn down like this, that line changing from red to green, you have 4 factors up here that you can see are in the right direction. So a descending chart pattern and candlestick pattern, a descending monthly trend, a descending weekly trend, a descending daily trend. All of those things are pointing to lower prices. Okay, this is a bit like saying, oh my God, this horse is so bad, it comes last in every single race, and you know what? It's got another injury and they're still putting it out. It's even more likely to lose now. It's that sort of a thing. Down at the bottom, what we have here is whether the market's overbought, oversold, the momentum of this market, who's in control, buyers or sellers, that sort of thing. So that can add extra weight to the opportunity as well, although it's not relevant to this particular trade. So looking at a combination of these things helps us to establish the overall direction of this market. And you know what? As a sell trade, entry point on the close of that bar, it went on to be a really nice, successful trading opportunity. How do we establish those longer term trends? I can go through it with you now very, very quickly. If I click on open weekly and monthly, God, I hate it when it is. Hang on a second, bear with me. What I want you to do is I'm just going to put my cursor over that entry point. So there was that trade from the 25th of April. Okay, so in simple terms, I want you to look at the lower time frames. Okay, I want you to look where my cursor is tracking. Okay, so you see on the 2 charts at the bottom, you see I've got a black line, a horizontal and vertical line. Okay, so when I move back and forth, it changes on the time frames at the bottom. What I'm basically looking at here is what is the color of that line relative to that candlestick. Okay, that's in a nutshell what we're looking at. So effectively, I've got this market here turning down. So that's like my little market moving downstream. But I've also got, a big river moving downstream on the weekly and an even bigger river moving downstream on the monthly. So these are all pointing lower. Do you see that? Do you see the red line on all 3 of those charts at that point? So you can see the vertical line, the black line there. Do you see all that? Give us a quick yes or no. Let us know in the questions box. What this is telling us is that there is a combination of things that are going on right now. So yes, we've got a turn down on the daily, but it is in line with a downstream move on the weekly and also on the monthly as well. And in combination, these together formulate what has historically been a very consistent trading opportunity. All right. So everyone, can you give us a yes or a no? Is this all making sense so far? Are you still with me? You see what we're doing here? Yes or no? Let me know. I'd like as many responses in the question box as possible. That'd be fab. Thank you. Okay, good. It's all about context. So for me, I'm not interested in really taking anything unless I have something else confirming an opportunity. So just because this line changes from red to green, I need to see what else is going on. So do I have an ascending chart pattern? Well, no, I don't, because otherwise I'd have CP written down here. Is this in line with an uptrend on the weekly and monthly? Well, of course it isn't from the chart we just saw, but again, otherwise we'd see MT on here and WT and so on. We don't have those things. And therefore, this makes this a higher risk, lower probability opportunity. All right? Simple. Now, is that it? That's what our new traders start on. So when you're looking at that, that's what the snipers are all based on. Okay, so with the right patterns are in place, one of these discs will appear on the chart. And there is a particular sniper strategy that would apply for indices, a particular strategy for for FX and for commodities. And then there's a particular strategy for stocks and a particular strategy that is geared for, again, specifically for cryptocurrencies, based on the way in which these markets move. And they do move differently. So one strategy that works for one, it doesn't quite work for the other. There's subtle differences there that lead to slight changes in the strategy there, which is important to know and understand that. That's why we have 3 different programs. We have a FX index commodity program, we have a crypto program, and we have a stocks program, simply because these markets move differently. All right, so that gives you a good understanding. So the indicators that we're using, Peter, are actually our own indicators and settings, but effectively this line through the charts, the repeatable entry point, as we might call it, is what we call the vector average line. And then the other things, well, on the longer term trends, we're also using that same line. as well as again the chart pans, candlestick pans. Down here at the bottom, again, it's our own math, sound American maths, for momentum, so the degree to which markets are overbought or oversold and so on. Let's move on a little bit, because what I also want to establish is some of those other things that we look at where we have an element of discretion involved. Okay, so this is the starting point, and the right parameters, the right setups or combinations of these 5 factors will bring in a sniper disc, one of those discs that are on the chart. What we can also do is think about a few other filters as well. Now, you don't have to do this, but this is what I look at when I'm looking at, and I'm going to show you some of these bits in a second where we go through some different charts. So there's sort of the more discretionary types of filters, because the system actually takes care of all of the left-hand side for us. So can you think of anything else that, as a filter, something to say yes or no for a particular trade? Can you think of anything else that we might consider looking at for a particular chart? Let me know. You just put something in there. Is there anything else that you find useful to help you to establish whether it's a particular probability of a winning trade or not? Again, let us know. For me, we look at pivot points. So there are particular lines we look at the chart. I'm going to show you that in a second. So is the market bouncing off a Fibonacci level? If it is, or you can look at general support and resistance as well. But I tend to look at what we call our pivot points. So that tends to be quite important. So Fibonacci based pivot points, really important. We've got them on the system here. So when the market's banging into a certain level, if it's hit off that level and then led to a turning point, that adds confidence to a trading opportunity too. So these things are more subjective, more discretionary, but you know what? They can be extremely powerful for trading opportunities as well. Nick, time of the day, for example, New York Open affecting volatility. Absolutely, that is an important point. It's more important for intraday trading, so day trading, short term, rather than end of day trading. But you're right. But if you can think of anything else, Nick, that'd be great as well. But you're absolutely right for day traders. That's a very important thing. Economic data. That's also quite important. Have we got relevant economic data coming up? Now, this is again more discretionary. A lot of trades, it doesn't have as big an impact on markets as you might think. But certainly things like interest rates are quite important. So if you're going to be trading a load of dollar pairs and they've got FOMC statements, the following day, you might want to think twice about it. You might want to reduce your trade size, maybe. You might want to close and take profits before something like that, because interest rate data will have a massive impact on currency valuations. So things like interest rates, non-farm payroll. Do I worry about too much other stuff? Not too much, unless there's something particularly relevant at the time. But otherwise, interest rates and non-farm payroll are the most important economic data items that go there. If you're going to trade stocks, of course, earnings is pretty important as well. Whether a company is reporting its results or not. And the other thing is important is something called the VIX. Now, I don't really have time to go through that today, but if I'm going to be trading indices, then I absolutely want to know where the VIX is because it gives us a measure of fear and greed that's in the market right now. Now, I'll talk about that in other events, and if you're on our programs, we'll talk about that as well within the course. But that is hugely important if you're going to trade indices, because that really can give you a fantastic gauge on when to be looking to perhaps even take bigger trading size. To be honest with you, it certainly does a lot for my confidence with my trades, that's for sure, on index in particular trades. So FTSE, Dow, S&Ps, that sort of thing. Okay, so these are the things we need to be looking for. Okay, now this is level 1. So this is what our system takes care of. Okay, level 2, on our training programs, this is what we'll teach you to then consider as a second stage. All right, you don't have to worry about it too much at the beginning. You can get perfectly great results without it. But if you want to fine tune those results a little bit and you want to have that deeper understanding of what's happening in the markets, then stage 2 here can help you to take extra results. I'm going to go through a few examples. I'm not going to be on for too long. I'm already overrunning because I tend to do that, I'm afraid. But what I do want to do is talk about a few more opportunities and talk about what we can do to sort of identify some of these opportunities. I'm going to mostly focus on foreign exchange today, just because actually it's what most of you said you were interested in trading. But let's have a quick look at it. Let's run the scan and let's see what trades are setting up for today. I always like to look at what's going on. I'm going to look at the scan over the last 3 days simply because that's trades for today, trades yesterday, and trades the day before. So that'll be Friday night. I want to see what's setting up and how we could be looking at those opportunities to establish an edge. So as we go through this, I'm going to be bringing in the factors that we talked about before. Okay. So what I'm going to do, let's start off with the top. Let's talk about Australian dollar against the Swiss franc, which was a new opportunity that was set up last night. It's pulled back a little bit, disappointingly, but it was a new opportunity from last night. So what I'm going to do is just tighten up that chart and let's just have a look and see what's actually happening here. Now, a couple of things that I can see that's associated with here. So there was the buy trade from there. Okay, what I'm going to be doing here is looking at, well, the context of the sniper. So as this line changed color from red to green, the system has produced one of these sniper discs. It's got a blue inside, which is a particular type of trading opportunity. Okay, now what's happening here is that alongside this move up, this turning point up, we have a ascending monthly trend and an ascending chart pattern. Okay, so effectively this is saying that there are certain factors in place that would suggest that this market has got a good likelihood of being a winning trade here. Historically, that pattern, that combination of rules-based factors that we showed you on that slide have produced consistent winners based on the output that we recommend for traders. Okay, now what is that output? Well, let's have a look at that, because if I bring in my TradeMate tool, we can establish what the target was for that trade. So we have our starter limits, our starter targets. So the target for that opportunity was 70.31. What's the market got to? 70.21. So annoyingly, it hasn't quite got there, but that's okay. The point is that that's set up as a buy trade. Now, how could we have looked at some of the other factors? What else would we do? Let's just zoom in a little bit. In fact, let me just get rid of these things. I don't want to zoom in at all. The other things that we can do is try and establish support and resistance and so on. Ultimately, the system has identified this as an opportunity, and based on past performance, it's got a 70% likelihood of being a winning trade. That's the win rate based on the target that I showed you earlier. So looking at a stop loss here, looking at an entry there, and the target wherever that was, there's a 70% win rate based on those parameters over the last 11 years or so. We can actually start to understand a little bit more than that. What you can also see is this market banging into a big resistance level. Is the market likely to find resistance up here? Well, it's already done it. 1, 2, 3, 4. Arguably, maybe not quite got there a fifth time. I think it's just a little bit inside that objective. The point is, more we can understand the context of these moves, the better our trading will likely be. So the first stage is simply to go off TradeMate. Actually, as you understand more about the markets, we'll start to understand context, where these markets are more likely to go. But let's focus on the rules for now. That's Aussie Swiss. Again, will it go up from here? I don't know. History would suggest it will do, or 76% likelihood that it will do. But then equally, that's a 24% likelihood that it won't. So, time will tell. The other thing that we can look at is support and resistance and so on, in terms of where's the market bounced from. This is where these pivot points come in here as well. So the market bounced off those levels. It did bounce off a level there. The market did then turn into a buying opportunity. I quite like this as a trade. It's a nice enough looking trade. It hasn't hit target yet, but it may well do. And what you'll find is that a lot of these trades actually hit target within a couple of days, because that's what we're generally looking for, is a short-term move. And the reason for that is because that's how often what the market does. If you look at this, these trend directions are all taking place over maybe 4 or 5 days. They're not longer term moves. That actually, you can look at charts and think, well, do you know what? What a fantastic move this one was here. Fine, but you're looking at one move here as opposed to 1, 2, 3, 4, 5, 6, 7, 8 moves like this. The more likely scenario, what's the more likely scenario? A small move or a big move? The more likely scenario is a small move. So what should we be trying to capture? A small move. Why would we want to try and capture a big move? Because in order to have a big move, you need a wider stop loss, you've got to give it more room, and more often than not, the market comes flying back, knocks you out, and you end up not making any profit on the trade. So it's about an understanding of the market. So what this is all about is really trying to find when the market has historically produced successful opportunities, being able to identify those clearly and visually, and then being able to trade them in a confident way. That's Aussie Swiss. We can also look at Aussie New Zealand, which is also coming back a little bit here. But again, it doesn't really matter because what we're just trying to do here at this point is understand what this market's telling us. So there was a buying opportunity last night. It went up a little bit. It's okay. Break even on the trade at the moment. It doesn't really look any different to this opportunity. And the reason why this has got a sniper on the chart is because what the system has done when this line changed color from red to green, like it did here as well, it's established that turning point. And here, doing the same thing here. The difference on the buying opportunities here and here is that they are supported by an ascending weekly trend, an ascending monthly trend, an ascending chart pattern, and also the blue line there, the ascending daily trend. All of these things are demonstrating momentum there as well. This market is pointing to higher prices. It's this kind of thing. Now, at some point, that trend will turn around and reverse, but at this stage, there's nothing to demonstrate that at this stage. So what this system is doing is telling us, look, we've got another one of these buy trades. We've got another one of these buy trades, and that's what we're seeing very, very clearly on the chart, okay? Again, everybody, quick yes or no. Is this making sense here? So in terms of this opportunity, how would I be looking to manage that trade? Again, I can bring in TradeMate. So this opportunity that was identified last night. So what I'm going to do, I'm going to use what I call our semi-aggressive stop. Okay, why am I using that one? Just puts it below this bar here. Okay, so it gives it a little bit of room. As far as my target goes, I'm going to use my D1 sniper strategy starter limits. Why am I using that? Because that's like a real rules-based, clear, simple to use target, calculate trade details, and I can see the parameters for that opportunity there. I can see the stop loss, I can see the target based on my entry points, and I can see that here we're looking for this market to go to 110.90. Okay, what's the market got to? 78, hasn't got there yet, but a nice enough opportunity. Okay, so it's about seeing where this one goes. Will it be a winner? Don't know. Time will tell. That's all we can do. Let's have a look at some of those other ones that are in that scan because I do want to try and go through as many of these as I can today. CAD Yen. You can see here, this is another one that's setting up as an opportunity. Now, what makes this one a sniper? This one's a sniper. This one's a sniper. This is actually quite an interesting chart. In fact, if you don't mind, I'm going to just reduce it a little bit, tighten it up a little bit. What's happening here is that you've got to turn up here. This is for tonight. So this is not a buy trade now. So I don't want anyone thinking, oh, let's go for it now because things can change by 9, 10 o'clock tonight. But what we've got at the moment is that intermediate line is blue. We've got an uptrend on the weekly, an uptrend on the monthly. We don't have an ascending chart pattern because this market's breaking lower. So it's starting to build a change of direction. But what we do see is a market that was like this. And now it's starting to... There. This is where we are now. We're here. This pink one, let's call this point A. Let's call it point B. Let's call it point C, and let's call it point D. This is point D. This is point C. Okay. I didn't even put a C in it. Oh yeah, C. And this is A. So the market's hit a peak up here. That's in a major uptrend. But what's interesting is we then posted a lower high. We've got a sniper disc in here because it's looking at this. Actually, these are one of my favorite types of trade, these pink snipers, because these are telling us this market is starting to buck that trend direction. So we're not in that first trade. The second short, you see how the market's then starting to rotate back down. It's a bit like saying, well, oh, look, if this market goes up, and then if it's going to go back down, it's got to start posting lower lows, lower highs. Well, this is where we are here right now. Does that mean we're going to end up with like this? I don't know. But what we can see is that historically, when the market, even if it's in a strong uptrend, when the market starts to produce a lower high, and we start to see that market starting to break down again, in other words, it doesn't make a new high, it starts to make a lower high, then actually it's starting to say, this trend could be over with right now. That led to a really nice sell trade. Beautiful. I really like those pink ones. And then we've got another buy trade here because it's moving back in line with the established trend. So I'm still okay with the trade. but we're starting to think about taking short trades as well. So the context is really interesting on this one. I still like it as a buy trade because ultimately we've still got an ascending, daily trend, weekly trend, monthly trend, and the momentum's turned positive as well. There's a lot to like on this trade, but we're also starting to think about shorts. So that's what the system is doing for us. I'm probably going into far too much detail at this stage, but what I want to do is just give you an idea about what's really behind the snipers, and I think that's useful. Actually, let me know, is it useful? I know a lot of people, you may be using Trendsignal's system already, you may not be, you might be thinking about it. I could just say, I'll just trade when the snipers are there, but that's fine, but then you don't really know anything about them. But actually, if you start to understand what's behind it, or what's generating them, or get an understanding of some of the maths behind it, then actually it really does help our ability to follow it, I think. What else have we got here? Pound Swiss, really interesting one there. Lovely buy trade from a couple of days ago. And again, you've got the buy sniper there. Really nice and straightforward. Again, one of those pink ones, market moving back up. Really like the pink ones. But what we have had again here is the market bouncing off support as well. And this is what we'll teach. In fact, I went through this in a live session a couple of weeks ago. Some of you may have been on this particular live session, but the market found a bit of support off this level here. That's what we call the Fibonacci pivot point. Market hit that level, hit it again. Market found support off that level, rallied, gave us a sniper buy, and there we are moving up to resistance. That's the resistance level, 124.04. That's the ultimate objective for this trade, and that's where it's gone and stopped and pulled back. Really nice, clear trading opportunity. The first stage is to follow and look for the snipers. The second stage is start to bring in some of these support and resistance elements that can help us to pinpoint better targets and so on, based on the context of what's happening right now on these particular charts. Let's have a quick look at EuroCAD as well, because again, this is a market that's starting to go the other way, and it's interesting that I'm showing you this one because this market, it's going against us. We're not in a profit in this one, and that's fine. It's okay. This is a winner. This is a winner. This is a winner. But it's this that's happening now. We're here. No, we're just there at the moment. That's where we are right now. But what's interesting is, what's this market going to do from here? Well, it could start to do this. And then that next buy will probably be a nice pink sniper as a buying opportunity, having come off a higher low. So it'll be interesting to see that, and then you're looking at that type of scenario. What's also really interesting as well is the market's holding steady off this. Look at the low there. Okay, that's hit a low of 133.86. If we start to actually look at the higher time frames, which again, I don't want to confuse anybody here, but I'm probably going to. This is the monthly. This is what the longer term picture of this market is. What happened the last time we were down at those lows? The key price from which we turned. The last low is here. That dotted line, 133.86. That's the key point from which this market found support. What did the market get down to a low at? 133.86. Okay, it actually hit that to the pip, and then it started to move back up again. That's why it's arguably the reason why this current trade is failing, because we've taken that short right on that support level, and it's starting to bounce. It still could be a winner, and you know what? Again, over time, these trades are still okay. But we can start to build a picture by looking at those extra factors. You don't have to. A lot of our traders don't. They're not interested in it. But you look at these dotted lines and you can see that these patterns, they repeat themselves. Time and time again, the market will find support off these levels. And it helps us to identify major structural levels on the market to help us with confidence on trades as well. And I'm not saying that any of our members would have avoided that short, but it's all about understanding what the market could potentially do from here. If the market's going to give us a buy now, then I'm actually going to be really interested in on EuroCAD, because we're bouncing off a major structural level from EuroCAD that was last hit, believe it or not, in April 2015. That's what this market does. So you don't have to look at all of that, but it's all there on the chart. Okay. I've got a question actually. Now, some of you might think, okay, I don't know what you think, but you may be thinking, well, that looks really technical. It's not really for me right now. Would anybody here, are you interested in getting to that point where you can look at those things on the charts? Do you think you'd like to get to a stage where you can look at the charts and have that deeper understanding? Or do you just want to trade it based on face value and take those opportunities? I'm actually quite interested to know because, as a system provider, which really we are at Trendsignal, I sort of think, what do people want? I know what I want. I do all of this stuff, but what I want really is kind of what we have, which is something that gets me to the action point very, very quickly. And then I can add an overlay that can determine whether this is something I want to take action with, and then I can choose how deep I want to go. That's kind of, and how deep I want to go depends on how many commitments I have on at that time, whether I'm taking my kids to rugby or cricket, or whether whether I'm busy, whether I'm not busy, that sort of thing. Happy with snipers for the time being, and that's fine. That's all we really have to do. The snipers do a lot of the hard work, for us. I guess, in golfing terms, it's perhaps the difference from going from a single figure down to a scratch, player. It's having that deeper understanding, if you like, that can really make a difference to results, but it's not required. We can still get significant enjoyment and a good quality of results without needing to apply that level of analysis. Anyway, that's interesting. Thank you for the feedback there. So look, I think that's mostly it for me. What I wanted to do today was just to give you an idea, a little bit of depth of understanding about the strategies. We've talked a little bit about the time frames. We've talked about the filters. We've talked about how we identify things on a rules-based approach. The snipers take into account all of this good stuff here. Okay, so when the right patterns are repeating themselves based on monthly trends, weeklies, dailies, chart candlestick patterns, momentum, we have analyzed every single one of those turning points to look at the right types of patterns. And when those patterns repeat themselves, one of those discs will appear that have consistently produced great trades in the past. Yes, of course, some loss-making trades. You can't have it both ways. As part of our coaching program and development, you can then, should you wish, look to progress to incorporate some of these other elements into your trading as well. But as I say, there's only so much I can go through today. This is really a bit of a taster session, if nothing else. Okay, look, that's pretty much it for me. Guys, look, if you're already a member of Trendsignal, that's great. And hopefully you're making great progress. And hopefully this has helped you take that next stage further with your trading. If you're not yet a member, then why don't you get in touch? If you're interested in having a chat with one of the team, there's some details there. We can talk to you about the system, how it works, how you can get access to it, and so on. And if you'd like me to arrange someone to give you a call and to go through it, how we get started, how the courses work, then just pop your phone number into the questions box on the system there, and I'll make sure someone gets in touch with you. So let me know. As I said, if you're a member already, then remember, attend the workshops, and we can guide you through the process, the coaching, development, and so on. And if you're not yet a member, but it's something you're interested in doing or in considering, then get in touch with us here. Or, like I said, pop your phone number into the questions box, and then I'll make sure that one of the team gets in touch with you, and we can have a chat about whether we're going to be the right fit. Otherwise, guys, have a wonderful week's trading. That's it for me. This has been Adrian Buthee, head of trading at Trendsignal, and hopefully we'll catch up again sometime soon. All the best with your trading, and bye-bye for now.